pension statements in May of 2023. So pension statements will be out much sooner for the 7/1/2023 valuation. Don't expect to get it in May of 2024. You'll have it sooner than that.
Thank you guys in your department for all your work. I know this is a lot of.
We'll get going then. We'll call the
That'd be
meeting to order. Second item to hear, consider and approve the July 26, 2023 minutes. I have a motion. I'll make a motion to put that on the table. Can I have a second?
Second.
Seconded by Brenda. Any questions, concerns about the minutes? Seeing none, all in favor of approving the minutes from July 26, 2023, say aye.
Aye.
Any nays? Okay, vote is unanimous. Item number 3, Town Retirement Board retirements for approval for the Board of Ed and for the town. I'll make the motion to put this before us. Can I have a second?
Second.
Seconded by Brenda Kupchak. Okay, who's going to speak to these retirements?
Megan?
Sure, we have a number of retirements to review and approve. You have the calculations in front of you. The option they've selected is highlighted. So you can see what option they've selected for their retirement, and they're in order based on Board of Education and town. On the town side, we do have an early retirement. That means that participant will have a pension, but they won't have OPEB.
Any questions on the retirement benefits for any individual from the Board of Ed or the town?
What Megan just said, that just for the Board of Ed?
Board of Ed, is that just for the Board of Ed? Anything
No.
on the front of the
So
vote, right?
Board of Ed don't have OPEB on our side,
Gotcha.
but
Okay.
on the town, Paula Jensen, she will have an OPEB. She can be on our healthcare, but the early retirement, Jonathan, she will not have OPEB.
Okay, so that was for the Board of Ed and the town.
Gabby, would you mind muting call-in 4 and call-in 6 because they're making noise here.
I do have a
Jack, you got
question.
question?
I do. When they say pending application, what does that mean? If they don't fill out the application, then what happens? Do they come back? Do we have to re-vote on them again?
They've all come.
Um,
I just wanted to get everything out to the recording secretary in advance of the meeting. I have since received the completed applications from all the potential retirements.
Thank you.
Any other questions? Did I know if there's any other questions? Is it just the callers?
Yeah, callers and anyone here.
Okay. I am seeing no further questions.
Jack is muted now, so I don't know if you're going to be able to get his vote.
But Jack, can you hear? You can hear us, though.
He's muted. Oh, he's unmuted now.
Okay, back.
Okay.
Okay.
All right. Seeing no questions, no further comments. This item is before us. We'll put it for a vote. All those in favor, say aye.
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 Any opposed? Seeing none, it is unanimous. Okay, item number 4, to adjourn. Make a motion to adjourn.
Motion.
Second by Brenda. All those in favor?
Aye.
Aye.
That meeting is done.
You haven't lost your touch, Mr. Brown.
Brenda, I know, I got to keep going or I'm going to hear it from you. Okay.
And you're used to that.
That's right. Hurry up, hurry up.
Hurry up. Well, you're very good.
We have 5 minutes to 7, so should we wait? We should wait,
Yeah.
right?
We should probably wait. We got, I think as long as everybody stays, we got Jack's on, we got 4 on there, 5, 6, 7, 8. So we're good. What's that?
Oh, great.
First 15 minutes.
Yes. Yeah, we got,
Yeah, so should I wait till 7, I guess?
yeah.
Couple minutes too, about 3 more minutes.
It's off clock, so.
You're running a tight ship there, Mr. Brown. I like it.
Jim, thank you very much for jumping in there. I really appreciate it.
Not a problem. No problem.
Ryan, you'll do a really quick overview?
Yes, when it comes to 7:15, you mean?
Yeah.
Yes.
No, 7.
Are you doing any kind of overview for the vote?
We have 2
Up to the
votes,
vote.
right? Let's make sure we got this right.
So what,
We have the private equity vote,
private equity, right, is the main vote.
and then we, monitoring contract renewal. Who speaks to that?
That's, would be someone else. I don't know.
Which one is that?
Lawrence? Oh, I can talk to him. Yeah, that's,
We'll do the, I have to make a motion to move items on the agenda, so, I mean, I'm gonna be right about it, and I'll just.
Yep.
Okay.
So Jer, is the private equity vote the one of an import that needs to
Yes.
be, like,
That's,
that has the, that's the one that has a time crunch, right?
There's 2.
Oh, two.
Harbor Vest is the more important,
more, yeah.
the larger vote. And then Caroline said the contract renewal was a little easier of a vote. But the allocation of funds for Harbor Vest is a,
We have to approve the minutes too. Okay. We have to approve the administrator's report.
We don't have to do that. Yeah.
Okay.
yeah, should I be aware of time, like how much time?
For yours?
Yeah, I don't, doesn't matter what it is, you just tell me, but,
So,
you know,
Like 2 minutes.
like 2 minutes?
2 minutes, that's it.
Yeah,
Max
Once
of
we're
5.
we're through the first vote,
Uh-huh.
then we can take a break.
I see Chris
Okay.
is shaking his head in agreement.
Just gotta get through that first vote.
Okay.
Yeah, no problem.
Whatever.
Do you want to give it 2 more minutes?
We just want to get the vote. Yeah, it's 7 o'clock, but I mean, I just want to make sure we get the vote in because I know Carolyn said this is important. So,
Okay.
and we're very lucky we have a seasoned chairperson there.
Very seasoned.
Very seasoned.
2 years though.
You never lose it. It's like riding a bike, Mr. Brown.
Okay, we will begin our joint retirement investment board meeting, October 25th, 2023. We'll call the meeting to order. I'd like to make a motion to move the items on the agenda. We'll just say around as the chairman sees fit. Can I have a second?
Second.
All those in favor?
Aye.
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 Any?
Aye.
Okay, so we'll move on to item number 2, to hear, consider, and approve the July 26, 2023 minutes. Can I have a second? Second. Second by Jared. Any questions on the minutes? Okay, seeing none, we'll bring that to a vote. All those who approve the minutes of July 22nd, 2023, say aye.
Aye. Aye.
I will abstain because I was not that meeting.
Okay,
Then I should.
we have 1 abstention. Any nays? Seeing none.
I, record, I should, if we have 2 abstentions
2
instead.
abstentions.
Thank you. And hello.
Okay, we're going to skip to item number 5, the private equity discussion and vote to Harbor Vest. Make a motion. Can I have a second to put this on the table?
Second.
Seconded by Brenda. This is now before us. And Brian, we'll turn it over to you.
Sure. Good evening, everyone. Good to be with you in person. Would it be helpful to reference any pages or just state the commitment amounts for approval?
I think you can state the commitment amounts and then if there's any questions from there,
Okay.
I think we've had
Right.
overview and review in past meetings, so.
Sure.
Yeah.
Sure. So this is regarding the commitment to the Harbor Vest 2023 fund. The pension and the OPEB are investors in the 2021 and 2022 fund. We look at this at an annual basis, the pacing to go towards a 10% target over time. So these amounts have been adjusted, say, from 2 years ago, given on the market. What is proposed and was discussed at last meeting, and these are in the materials, so let me know if you need to reference pages. But for the pension plan, it would be a commitment of $15 million in 2023. For the OPEB, the employees OPEB would be 0.7 million. And for the fire and police OPEB, it would be 1.1 million. The difference only because of the values in the plans. But all of those numbers do a gradual target of 10%, which was approved several years ago. And again, we look at that pacing in light of what's happened to the market values of the portfolio, what's happened to the market values of the underlying investments. What questions do you have, and what additional color could I provide that it may have gone over too quick?
Any questions?
No, I just would make a comment that, I'm glad that we're doing the 10%. I think that's, prudent and that's the right thing to do. So I appreciate you highlighting that.
Yes. And, when back in 2021, if we forecasted 2 years ago, in 2021, we were forecasting that the commitment for the pension plan would be 20 million in 2023. But again, because of how the markets have evolved and because we don't want to go over that 10% target, that commitment, as we sit here in October of 2023, is 50. We're constantly looking at this to adjust the values based on what happens in the markets.
Mm-hmm. Thank you.
Any questions? Tom, I see you just joined us. Do you have any questions?
I don't. I have to confess, I was just let in, so I missed the beginning of this, but I'm not going to ask you to start all over again.
Do you want to do a 1 minute?
Sure.
Yeah.
Tom, we were jumping right to the commitment amounts for the 2023 Vanguard HarborVest Fund.
Yep.
And these numbers for a commitment amount to this year's fund are to get us to a 10% allocation over time. So we've had different commitment amounts each year.
Yep.
So for the pension plan, and this is in all the materials, but in summary, for the pension plan, $1 million commitment.
Yep.
The OPEB for the employees OPEB would be 0.7 million, and for the fire and police it would be 1.1 million.
Okay.
So that would be the pacing that we're continuously looking on based on how quickly we get distributions from at least for the pension plan. We have existing managers with existing investments with Mesero and Lexington. And so we're looking at how those distribute as well as calls.
Yep.
Okay.
Thanks for that, Brian.
Sure, Tom.
I'll just ask one more time, make sure if there are any questions or comments. I'm seeing none, so this motion is before us. I'll call it to a vote. All those in favor, say aye.
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 Any abstentions? Okay, it is unanimous, so that passes. We'll go to item number 6, securities monitoring contract renewal, with Pomerantz. I'll make a motion to put this before us. I have second.
Second.
Second by Brenda. Turn this over to you, Jared.
All right. You guys have seen reports and some presentations from Pomerantz in the past. Matt DiCillo is the one who represents us. So basically they follow any cases of companies that invest in our pension fund and give us a heads up when they're are cases out there that we might be interested in, maybe interested in signing on to as a, in a class action suit, or if we want to lead the suit, as we did with one recently, the Allianz case. And so this is just an agreement to allow them to continue to do that for us. This is not an exclusive agreement, because we do get notifications from other firms like them. And so we can continue to be informed by other firms out there. So this is just to allow us to enter into that agreement with Pomerantz. Any questions?
Jack?
Jared, do we have agreements with these other companies, these other organizations as well? Or, I mean, you said there's others. I just want to make sure we're all have a similar agreement with all these other law firms? Or-
You know, we look back, I haven't seen any agreements with the other firms. And so this is they actually proactively came to us with the agreement. Originally, they were requesting that the agreement be exclusive with them, and we had them strike that from the agreement.
And Jared, does this agreement have financial terms in it?
We do not, any financial benefit to the firm is related to whatever the case is. So we don't pay them.
I don't mean, but is it outlined in the compensation in this agreement, in the sense that, or do they make it up on a case-by-case basis?
I believe it's outlined in the agreement. But yeah, I would have to look at that, and I imagine it does differ from case to case.
They get a percentage?
They get a percentage of the total of the whole class. So whatever that is.
Again, I don't mean to seem combative. I just want to just lay it out. I mean, Pomerantz, I haven't had anything, negative to say about him. I just want to understand the relationship.
Okay, thank you. Any other questions? Thoughts or concerns? Okay, I'm seeing none, so I'm ready to bring this to a vote. All those in favor of the contract renewal with Pomerantz, say aye.
Aye.
Hi.
Aye.
Any opposed? Abstentions? It is unanimous. Okay, that is the last voting item on the agenda. So.
Well done, Mr. Brown, 709. I am impressed.
Thank you, Ms. Kupchak, and have a great rest of your night.
You have not lost your touch. Well done. All right, I apologize that I have to go, but I am a little overcommitted these days.
Okay.
Thank you, everyone. Have a good evening.
Good evening.
Thank
Take care.
All right, take care.
Okay, we'll go back up to item number 3, the administrator's report. Jared, is that you?
Megan, yeah.
Wanted to give everyone a quick update on what's been happening on the administrative side of the plan. The Milliman implementation is still chugging along. We have postponed our go live date with a target date of April 1st of 2024. Our plan document is nearly final with Richard Cohen. The next step will be to bring it to the unions for them to review and make questions. And then we'll bring it to this body for you to review, make comment, and then we can move forward with the finalization of the restated plan document. The police and fire pension plan implementation with Milliman will begin that once the town plan is live with them. So the decision was made in the implementation process to focus on one group at a time, finalize the plan document, move everything live with Milliman, then start working on police and fire. As we're going through the implementation, the corrections are slowing. So my list of corrections this time is much shorter than the last administrator's report. So we found that cost of living adjustments in 2022, there had been 11 of them applied in error. So we reached out to the participants to let them know that they received a cost of living adjustment in error and corrected it for October. So now everything is correct starting the first of this month for those cost of living adjustments. The 7/21/2023 valuation reports are underway with Milliman. Police and Fire, I compiled all the data and sent it to Milliman. They're nearly complete with their analysis of police and fire, and they're pulling the town information from their system. So that's a huge progress for us with Milliman, where they're able to pull the majority of the information right out of their system for the last fiscal year. And then I'll fill in any gaps with the questions they have on the valuation. The whole thing should be done much sooner this year than it was last year.
Okay.
Any questions?
Yeah, I got a couple. For the pushback to April 24th, is there a specific reason that it's pushed back, that you've encountered a particular tough issue that pushed it back this far?
Just the discovery of some of the record keeping challenges, like for example, the COLA discrepancies that I just talked about, finding these things, going back in the documentation, making sure that everything is clearly explained in the restated plan document. So there was much discussion around this, that it's very vague in the plan document about when the COLA will, what the measurement period for the COLA will be. There was a 2015 summary plan description that was written, but I don't know if it ever got distributed to anybody, where it clarifies that language. So we're sort of piecing together bits of this plan administration through these documents and trying to codify everything very clearly in the restated plan document. So once we think we get something great, okay, this is super clear, then we come around another error like this and say, oh my gosh, well, somebody clearly misunderstood or interpreted it differently. So we have to go back to see what's written. Was it just a misunderstanding and a human error, or is the plan intention? So a lot of discussion around these errors as we uncover them.
Okay, and the most recent errors with the 11 people, was it an overpayment, an underpayment, a mix of both? And do we have any, are we concerned about any potential blowback like we had with some of the other people, earlier?
It was an overpayment, so they were not eligible for a COLA, but they were given the COLA in error. So they got 3% increase to their pension when they weren't eligible for it for 9 months. I think.
Okay, and is it, are you kind of doing it in one check, or are you doing it kind of offer them a payment plan? Because I know that could be, not insignificant maybe for some people.
So we ran it by the plan attorney, and he indicated that that we could just fix it going forward, that we didn't have to recoup payments. I ran it past Carolyn, and she said if the plan attorney says it's okay to do it that way, then to move forward with fixing it and moving forward.
Fantastic. And then one last thing. Will the delay, will Milliman still be providing pension statements for this year?
Yes, so that's part of the valuation process.
Okay.
So they're combing through that data right now. I think we issued the 7/1/2022 pension statements in May of 2023. So pension statements will be out much sooner for the 7/1/2023 valuation. Don't expect to get it in May of 2024. You'll have it sooner than that.
Thank you guys in your department for all your work. I know this is a lot of tedious and, fine tooth comb, and then a finer tooth comb after that. So we look forward to having this process done and, completed, and I'm sure you do too, but we do appreciate your efforts, and I appreciate the report and transparency.
Thank you.
All right.
Well, we're all set.
Great. All right. Thanks, everybody.
Thanks, Megan.
All right, thank you. Okay, we'll go to item number 4, the performance report and CIO update.
Sure. Yeah, I can jump back in, and I don't know if anyone had a chance to see my email prior to the meeting, but unfortunately do not have the performance reports as of the third quarter for the OPEB and the pension plans. And that has been a result of a transition to a new reporting system. It's actually with FactSet here. I think they're still based out of Norwalk. But the transition, unfortunately, has just been more manually intensive than our team has thought. And so we didn't want to produce something that was incorrect and then have to restate it. So again, the bigger issue, well, first of all is the apologies for that. I mean, it's frustrating for us. I know it's unsatisfactory for the JRIB not to have for me to review a performance report. But one of the issues that has been is for our clients that have assets that are custodied externally, but also with the private piece, it has been more just manual entry to make sure those numbers are correct. And so it is just taking the team a lot more than they thought there would be. So that's the quick summary. But let me just take some questions around that.
Brian, will you provide copies when they are available to us, this, off meeting time?
Absolutely. And so usually I forward the materials several days in advance of the meeting. And I was waiting until the last minute because we thought that they were still going to be able to produce it. But I wanted to get something out ahead of time. So it could be any day. I'm getting, regular updates from the team. But the short answer is absolutely, we're still going to produce a report.
Okay.
And I'd still share it with the team.
Are you privy to the numbers, or you don't even know what they are?
I don't even know the numbers, but mainly because of the private equity piece. But for instance, if I were to look at the presentation, I mean, I can get a good sense, given that.
I would just say, is there any kind of big red flag, is there kind of a major sector or something that kind of, that we would normally in a review look, say like, oh my gosh, or what's going on there, or positive and or negative?
Not so much, Chris. I'd say because a good portion of the portfolio is indexed, right? Both equity and fixed income, those numbers generally follow, or really identically follow, page 4 of the performance report, which are the broad indices. And it just happened to also on page 4, and this is regular, we look at, or we put numbers together for a 60-40 portfolio. So again, the pension plan is a 60-40 portfolio, but the only difference it has private equity and private real estate. So if I were to look at the quarter for about, a 60-40 portfolio of just equities and stock, that was down 3% in the quarter. And on a year-to-date basis, knowing that you're in a different fiscal year, it's up 5.7%. So I would expect it to be roughly in line with that. The other updated number that I have from Principal, which is about 5% or 6% of the portfolio, 5% target, but it's running at about 6%. These are preliminary numbers from Principal, but for the third quarter return was a negative 2.66. So again, I think it's going to be pretty close in line to where we are on page 4. And what I don't know is what the private equity values are, primarily from Mesereau and Lexington, right? HarborVest allocations have started on the 2021 and 2022 fund, but they're still small in relation to the other two private equity providers. So I don't think there'll be any kind of big surprises as far as numbers. The only thing from an asset allocation perspective that's still relevant, and this isn't new, is that the allocation to privates, whether it's real estate or private equity, are above their targets. Given that those numbers are still a little bit lagged, like they haven't come down or taken big marks. Like they're lagged from the public markets in 2022, but they're not big negative drawdowns like we saw in 2022 for the public markets. So I'd still say there's still kind of an over allocation, still within bands, still within policy, but overweight to their respective targets. Yeah, that's the high level summary. So I could provide, as soon as we have those, Chris and committee, I could write up a summary and send them to the JRIP. I know we went through the private equity piece quick, or if you still want me to recap markets, I'd love to just take your direction. So I'm happy to go in any length and in any direction. Well,
We go through, you willing to go through? Let's go through.
I am, well, certainly. Willing
Yeah.
to go through.
Any
We're still
objection to going through?
Time?
We have time. We have plenty of time.
Oh, okay. The votes are down. All right.
Yeah.
So Let's go through it at a high level. So on page 4 for those on the line. And this is to recap the markets for the quarter and for the year. And so these numbers on the page 4 represent the broad indices for equity and fixed income, and that's also within the town's portfolio. So if we're looking at just for the third quarter, for 3 months, you see US stocks and non-US stocks down 3% on a quarter basis. But as of the end of second quarter, US stocks were up over 20%. So it's just pulled back during the third quarter and also in October. But if you still stay on this page and look at the year-to-date numbers, which is the middle column or the greenish column, US equities are still up over 12%, and non-US stocks are up about 5%. I'll touch upon that in just a moment. So still strong absolute returns from the equities. On the fixed income side, looking at the middle of the page, this is the broad fixed income market, which we also hold within the portfolio. So US bonds for the quarter down 3%, and then that's pushed the year-to-date figure down 1%. So the story has been really in the third quarter of how much yields or interest rates have continued to rise. And so with that inverse relationship, that's why we're seeing negative numbers for the quarter. That was positive as of the second quarter. We do also hold in the portfolio for diversification, and you can kind of see it working a little bit. We do hold non-US bonds, and it says hedged. We hedge the currency risk, because if we didn't, it would be a lot more volatile due to the currency movements. So in the middle of that page, non-US bonds only down 1.3% for the quarter, and actually positive 2.2% on a year-to-date basis. So the portfolio is gained from having that diversification of both US and non-US fixed income. And on the right-hand side, you see the numbers where I was referring to of like a generic 60-40 portfolio still up 5.7% on a year-to-date basis. Include page 5 for perspective, but I'm sure it's stuff that you hear in the news as well, is as far as the US stock market is concerned, it's really primarily been driven by some large cap and some tech names, all related more towards artificial intelligence. So here on page 5, you're seeing like the 7, they're calling the market news loves catchy phrases, but the Magnificent 7, they're calling them, have contributed 76% to the total return of the market. So the leadership, or what's driven the market in the US, has been pretty narrow. So you see these companies, NVIDIA, which is really highly tied to AI, but also Apple, Microsoft, Alphabet/Google, Meta/Facebook, Amazon, Tesla. Those 7 stocks have really had a strong run up through the third quarter, and which driven most of the gains. Also related to that is, US markets versus non-US equity markets. The US market is more heavily skewed towards tech names, like on this page. And so that explains some of the outperformance between the US and the international markets. So I'm just on page 7. This is just repeating kind of what's on the previous page. But if you looked at the different market caps, large cap, mid cap, small cap, you see it's the large cap names that have driven more of the market versus the mid cap or small cap. So, investors seeking safety or the dominance of those tech names. And that also applies to the value growth component. Most of these names, or all of them, are really referred to as growth companies. And so you see the big outperformance of growth versus value on a year-to-date basis. Let me page forward to page 8. And this is looking at the yield curve and what's happening in the interest rate environment. This is looking at as of 9/30, but also how it was about from a year ago. So the yield curve is still inverted, meaning short-term rates like 3 months, 1 year, 2 year are still higher than longer-term interest rates, say is the 10-year. But more recently in the third quarter, it's the longer end rates that have risen faster than short-term rates. So still inverted, but it's been the longer end of the curve that's been moving. The Fed really controls the shorter end of the curve, what they do with the Federal Reserve rate. So on page 9, this is the different segments of the fixed income market, but I also already kind of covered how it's down year to date. What's, I guess, surprising, well, one is the US economy's done so well. So if you looked at different components of the fixed income market, like investment grade or high yield, those have done better than just generic treasuries. But the aggregate index, which we hold, is a mix of treasuries and investment grade credit. And I'll wrap up on at least on the markets on page 10. I included this slide because there's, just a lot of generic questions, like with rates where they are, should we just be on the shorter end of the curve? Rates are higher. Should we be in cash? Rates are so high right now. And that's true. There's a little bit of give up on a year-to-date basis. But what this slide is showing on page 10 is, well, how have bonds done once the Fed has stopped raising rates? They presumably are close to the end or close or at the end of the cycle as far as raising rates. And so what this page is showing is potentially, after a year after of raising rates, there is usually that, that kind of pushes an economy into recession eventually. And so what happens is that if and when there's rate cuts, the price appreciation on longer duration bonds, like the US aggregate on this page, is going to be much higher than if you were holding, say, short-term treasury bills on the far right-hand side. So bonds have usually responded much better for longer duration assets than shorter duration assets, like a year after the Fed stops raising rates. So that would be the disadvantage of moving into cash or into short-term bonds, because you would lose out on that price appreciation when the interest rate movements reverses. Let me pause there. Just any questions on the market or anything that might be top of mind?
So are you predicting any recession in 2024?
Yeah, so we and others, but I'll just speak for Vanguard's perspective. Coming into 2023, we thought recession would be here, this second half. And so we still think there'll be recession, but it's just been delayed or postponed. So our base case is that recession will be likely second half of next year. Eventually, these higher rates will flow through to the broader economy. It's taken longer than, say, previous other cycles. So yes, our base case is still a recession. It's really hard to engineer a soft landing, especially when you push rates up so high and for so long. But we're not forecasting any kind of deep recession, but a shallow recession is still our base case as, second half of next year. We were, as of only a month or so ago, we're still forecasting a particular, maybe one more rate hike in 2023. That looks on hold only because of what I described earlier, is that it looks like the market has kind of pushed rates higher and maybe done a little bit more of the Fed's work for them. And they may be, in fact, that the Fed won't raise rates. So that's kind of our view on recession, interest rates. And it's still going to be, we think, several years before inflation falls to like a 2% target, which is the Fed. So we don't see that really happening, getting to the Fed target of 2% maybe until 2025. I clearly included a lot of information on the private equity piece, but with respect to the portfolio, if you were able to flip or to go to page 40 of the presentation, we often update this and say, okay, well, what about the asset allocation for the plan? Of course, it's long-term in nature, but what we look at on page 40 is the target allocation for all of the asset classes. And then we use Vanguard's capital market assumptions for each of those asset classes, which are to the right of that target allocation. So looking out on a 30-year time horizon, given this asset allocation, we, at the median, we believe it would be around 7.12% at the median. Right below that, we always provide a distribution because you never hit the average, you never hit right the midpoint. But that's anywhere from 6.49% on the 25th percentile up to 7.81% on the 75th percentile. So that's well within range of the current town's discount rate of 6.9. When these get refreshed as of 9/30, I would expect that to come down a little bit, mainly because of equities, how strong equities have been year to date. But it generally doesn't move much. So that's 7.12% forecast return for the pension plan. On the next page, page 41, is the OPEB, and that has a higher expected return of 7.5%, so even higher than 6.9. And as a reminder, that's because the allocation is a little bit more aggressive for the OPEB, 70% equities, 30% fixed income, roughly speaking. So a 70-30 portfolio as opposed to 60-40. And then just in relation to, looking at on page 42, our economics team also often looks at, well, what are the valuations looking like in the market right now? And on the far side of this page, just looking at the broad asset classes, and with the exception of US equities, we think the market, both the international equities, but fixed income markets are basically fairly valued. But the US market still looks overvalued to us, namely given that big run up in the tech names. So it's not a predictor of what will happen in the next 12 months, but they certainly look overvalued based on our metrics. I think that's a pretty high level overview, and hopefully I covered it, but if not, my time is your time, so I'm here to answer again more questions or get into anything else.
Any questions for Brian? A fairly easy night.
Okay, yeah. There's a lot to get through. If there's ever a time when, you want me to hit on really any topic, portfolio or not, please let me know. It's just, these are always supposed to be informational, educational, and as opposed to just data, but happy to do that. So I think the portfolio is still well allocated. I'd say anything pretty conservative with that 60-40 allocation. The biggest discussion is really been around fixed income. One, because it's negative returns again, which is like potentially a third year in a row. But also because from an asset allocation, fixed income is now really providing returns, whereas before this Fed hike cycle, you weren't getting returns as an investor in fixed income. So short-term pain, but longer term, that's good for investors.
I'm not seeing any questions, Brian, so we'll move on.
Yeah.
Yeah, thank you very much.
Okay.
Appreciate
Good
it.
to see you. Yeah. You want me to hang around or take?
Totally up to you. Yeah, I think we're good. If you want to take off, you can,
Yeah,
Okay.
you can hang around. You're welcome to
Yeah.
hang around.
yeah.
Maybe I'll-
I don't think we have too much longer. So.
Yeah. One thing that I just wanted to put out for the JREB, maybe it's a discussion point at some point in time, but I don't know what the process with the town would have to go through is that, but if there is the possibility for Vanguard to serve as custodian, right now it's with Wilmington Trust, we would be more than willing to take on that responsibility only because it makes it easy for a couple things. Getting that performance report on a more timely basis. We can turn that around to the town. Usually it's by business day 7 or 8. It takes longer right now, given that we have to wait for information from Wilmington Trust. Not that they're doing anything wrong. It just takes us, we have to get that information and input into our systems. And then 2, it would allow us to handle any kind of, say, capital calls and distributions much easily without having to provide a written trade ticket to either to Jared or Caitlin. So those are some of the advantages. From an operational standpoint of being able to custody the assets. And from a fee perspective is we handle custody of no additional charge for clients. It's just a service we provide. So there could be potential cost savings to the town. So I know that's not something a decision to make overnight. But we'd be willing, would make it easier for a lot of our team to take on that service.
Okay.
Yeah.
Hey,
Brian,
hey,
was that-
Brian, Brian, is that do you commonly find that pension plans of our size use Vanguard for both, or do some prefer to have separate providers for custody?
Certainly some prefer, maybe prefer that. I'd say an overwhelming majority, of our clients, we have over 1,000 within our OCIO business. I can get the number, but an overwhelming majority do custody with us. Again, and maybe it just makes it easier all having it in one place, or just the speed and turnaround. So I think it's just a small minority of our overall clients. We can do both, and we have been doing both. It's just operationally simpler to custody, for us to process it. Mainly what that means is faster performance reporting.
And just not to get too far into the weeds, but are you white labeling somebody else's, like, BNY or State Street, or is it actually Vanguard Bank or somebody?
Right, yeah, there's different custody, custodial relationships that Vanguard as a company has. But I think you're right, Tom, in the sense that it is more white labeled, the relationship is with Vanguard, but I think there's underlying custody banks. But it all resides on Vanguard systems.
Right, yeah, okay.
Brian, was that part of the initial, again, I apologize, it was a while ago when you guys did our initial proposal in the OCIO presentation, was that included in that presentation, or is this something that you're now you're seeing after the fact?
No, it was included, kind of years ago, but it's not something that we need clients to move over. It's simpler, but it's not a requirement for, moving assets to Vanguard. And so it's more something, it would be easier, but not required.
I guess my more question
It hasn't changed as far as we've always offered this, and it's always been of no cost. Those components have not changed.
No, I guess my question more is like, when we did move to Vanguard, was there, again, I was on the board, so I apologize for not remembering, if it was something that we discussed at the time, or if it was something like, oh, we've already got an agreement, so we'll wait till that expires to move over, or is this kind of coming as a new, just a new way of looking at it, that's all.
No, we've had cursory discussions about it, but nothing in detail. I think it just kind of came to light a little bit more with when, we're changing over the performance systems and, seeing how much additional work it kind of took from that sense. But that's still on us. That's still no one to blame except for us for underestimating the manual work that was there. But I think that's what made me bring it up again, Chris.
Thanks, Brian.
Thank you, Brian.
Okay, thanks, Tom. Thanks, everyone.
Thank you.
All right.
Good night.
Okay, to item number 7C.
All right, I sent around earlier today and I apologize for getting it to you late. I know you guys were looking for it earlier. I had a lack of staff unexpectedly over the last week. So it got done a little bit later than I'd wanted to, but we only have a first quarter under our belt at this point in time for this fiscal year. Just a couple of highlights. We in looking at the first page, and the first page is the town employees pension plan cash flow. The typical timing of the employer's contribution, which we do early on in the year. Typically that happens in September. So you can see our contribution there. The cash transfers in order to pay for the benefits in given months. And then the new to this, which is something that the board was looking for, was the employee contribution. So we've included that in this report for the pension side of things. So the 170, it's a small dollar amount in the grand scheme of things. But that's so you guys can see what's going on there. Other than that, we have the typical typical expenses, the largest one being the benefits, benefit payments to pensioners, legal services, and the legal services, which are mostly comprised of payments to Ship and Goodwin, who has been doing the pension plan, putting together the pension plan, which Megan talked about earlier today. Other than that, we have typical numbers on the expense side. Next page is fire and police, which follows the same pattern there. And again, we did include the employee contributions. Nothing here that really stands out. So there's no real big highlights here for the first quarter of the year. And then the last two pages are the two OPEB accounts of the town employees. OPEB, again, this one has a little less information because of the way this is structured. It's not done in the same way that we do pension. And so we do we typically do a truing up at the end of each year to determine how much actually goes into the fund from our cash account. Yeah, nothing, again, nothing really to highlight here in either one of these. Any questions on any of those?
No? No questions for Jared? Okay. Thank you, Jared. We're at item number 8, old business. We have any old business to discuss?
No.
Okay.
Not that I'm aware of.
No. And then we're moving right on to item number 9 for new business.
No new business.
Jim, you're really good at this.
Yeah, I picked the right night to chair. Well, I didn't pick it. I got chosen. It was a good night to be chosen. Then we go to item number 10. Oh,
Business, we introduced Suzanne. Have you gotten to meet everybody else?
Is this your first time?
It is, yes, thank you. We'll just introduce Suzanne Karoglian. She is the newest member. She's replacing Susan Bala or Suzanne Bala Vaya. I've not gotten to meet her either. Suzanne works at the police department, so she's one of the representatives for that, for the JRIP.
well,
This is her first. Yeah, thank you.
Welcome.
Welcome.
Hi, thank you.
Thank you. Okay, then we'll go to item number 10 to adjourn. I'll make a motion to adjourn and I need a second.
Second.
Seconded by Jared. All those in favor?
Aye.
Aye. Never been opposed to that one. So we are adjourned.